There's various types of retirement income that are available to people. The most popular is the conventional annuity, largely because this provides peace of mind and guaranteed income. But you can also have investment-linked annuities where the future income depends to a greater or lesser degree on the investment returns generated by the investment company. You can also have temporary annuities, which provide a guaranteed income for a fixed period of time, typically 5 or 10 years, after which time you receive a guaranteed fund value from the provider to then go and buy another temporary annuity, conventional annuity, investment-linked annuity, etc. You can also have an income drawdown. For those with larger funds who have a greater appetite for risk and want the additional flexibility that an income drawdown affords, a conventional annuity provides a guaranteed income. You select the options that you wish, either a single or a joint life, a level or an escalating income, and any guaranteed period or capital protection that you wish to build into the annuity, and that then determines the level of income you receive, and that income is guaranteed for life. So it suits people who don't want to take risk with their retirement income and prefer the peace of mind that the guaranteed income affords them. A temporary annuity involves taking a guaranteed income for a specific period of time, typically 5 or 10 years. The way these work is the insurance company will use some of your funds to provide that guaranteed income. The remaining fund is then invested and produces a guaranteed return at the end of that period. From that point, you're then free to purchase either another temporary annuity, a conventional annuity, or an investment-linked annuity. An investment-linked annuity, to a certain degree, works in the same way as a conventional annuity, in that you select whether to have a single or a joint life annuity and whether to have a guaranteed period. Where it differs from a conventional annuity is with a conventional annuity, you get a guaranteed income for life based on the selections that you make. With an investment-linked annuity, you select a starting level of income, and the income that you then get in the future will rise or fall depending on the level of investment return produced by the underlying investment fund that you invest in. Income drawdown is the most flexible of the retirement options available to people, and it's typically only for those with larger sums of 100,000 or above in their pension fund. You take the tax-free cash in the same way that you would do with any other form of annuity, but the remaining money remains invested. It will then rise or fall depending on how the underlying investments perform, and you draw down an income set by the government between a minimum and a maximum level, which is now reviewed every 3 years. Income drawdown carries a far greater degree of risk than the other forms of annuity income available to you, and therefore if it is something you're considering, it's absolutely essential that you do take advice to look at the pros and cons and establish whether it is a viable option for you. And again, one of our qualified independent advisors would be happy to run you through those pros and cons and help you to establish whether it is a suitable route for you to consider.